even as export controls threaten growth. So I just feel like that's our market in a nutshell. There's just contrasting things going on.
It is, but at the same time, there is one area of the market that's been under pressure all day and remains under pressure. We're talking about rail operators. They're getting hit after we heard earlier from Norfolk Southern and Canadian Railway that their results suggested a cautious outlook. You got Norfolk Southern down 4.8%, CSX is down. You got Canadian Pacific down 3%. Union Pacific reported earnings yesterday that actually fell. Profit fell below analyst estimates. That was a result of winter disruptions, but it's continuing down today, Romaine, by 1.5%.
All right, we go back to the broader market here as we speak. The Dow Jones Industrial Average poking itself into the green here. A modest gain on the day, but when you consider where we open here, pretty much down about 1% or 2% across the board. The fact that we're now relatively unchanged in all the major indices, I think, Katie, seems to suggest that some folks thought the sell-off was a little bit too much.
Well, even still, if you look at the sector level, there's more bad news than good. You have 7 sectors in the red, just 4 in the green. You look at what's losing right now, it's utilities, it's industrials, it's energy as well. You look at what's doing well, it's financials, a little bit surprising. That sector up 0.7%. You also have consumer discretionary hanging on to gains there. A lot of that is coming from Tesla and it's coming from Amazon.
Of course, the big news was Microsoft, and that had a real chill, I think, overnight and into this early this morning here. In fact, it dragged down a lot of its peers, including Alphabet, as well as Amazon. We should point out Alphabet shares still down about 3% here on the day, despite the fact that Microsoft itself has rebounded after a more than 4% decline on the day, now trading roughly around the water level here. Keep an eye on Redfin and some of the sort of digital real estate companies here. Those shares down 5%. Folks over at Needham have an interesting commentary here about the potential downturn there, or the prolonged nature of that downturn, and how it might affect some of those companies. And if you're looking for 2 bright spots out there, Capital One shares up 9% on the day. This is because they actually raised their loan loss reserves, but a lot of investors applauding that, saying that some of the other financial companies haven't done this just yet. And this, at least, if you are expecting a downturn, puts Capital One in a better position. And Millicom International shares up about 20%. Of course, one of the biggest telecom companies in Latin America. Of course, we learned that Marcelo Claure over from SoftBank, previous at SoftBank, along with Apollo, kicking the tires on this company for a potential acquisition. The company has confirmed that they have been approached. Of course, the big news after the bell today is going to be Tesla, the former trillion-dollar company, now worth, I don't know, a measly like $460 billion, which I think some people will take. But you take a look at the chart here, a lot of people say, how do you value this company? Is it a tech company? Is it a car company? Last time I checked, they make cars, so that makes it a car company. And you look at the blue line at the bottom, that's what car companies are valued at. The yellow line is what Tesla is valued at. And there are a lot of people saying that if Tesla were valued in the same way that a GM, Ford, Stellantis was valued, you'd be looking at a share price of $80 instead of $459.
Maybe that's why they like to call it,
or the market cap.
A tech company.
Yeah,
a tech company or an energy company.
Yeah,
they took Tesla They took motors off of its name a few years ago.
Well, I mean, by that line, I mean Duracell's energy company.
It's actually a consumer discretionary company, if we want to go by the GICS.
Okay. All right.
Have you talked to Eddie Vanderwalt about this? How does he?
I saw he wrote a nice little screed on the live blog earlier
I can like feel the anger just on the paper.
Stop calling it big tech, people. Okay, we're not in the 90s anymore. He has a good point.
All right, there's a lot of debate we could do over what kind of company Microsoft is. There's a lot of debate, too, about calling a U.S. recession. That is the subject of the Bloomberg Big...
Tesla. Now Microsoft.
We were talking about Microsoft.
Can you just put your hand over his mouth? I can't. No, I can't.
We actually have a wall separating.
I can't reach. All right, let's talk about the U.S. economy. I don't know about you guys, but we have tons of conversations about, what kind of recession, when will it hit, so on and so forth. It is the subject of a Bloomberg Big Take that is on the Bloomberg terminal today. It's also in Business Week magazine, because we have mixed economic data, right? Manufacturing is soft, retail is soft, jobs market is pretty strong, continues to be. Well, Dana Peterson over at the Conference Board, she's chief economist, she weighed in on it. As for recession, maybe it's kind of happening now. Here's what she had to say.
The U.S. is probably entering into a recession right about now. Just about everything is worse within the leading indicators, and it continues to suggest that, yes, we are going to have some kind of a recession. We still think that recession is going to be mild. It's going to be brief. But nonetheless, that's going to be the outcropping of the Fed raising interest rates close to 5% within a few months.
All right, that of course is Dana Peterson, chief economist of the Conference Board, earlier on Bloomberg TV. But yeah, I know our focus is on earnings and what the CEOs have to say, but what the Fed does or overdoes or doesn't do enough, this will be really key in terms of what kind of recession, what kind of economic growth, and what kind of earnings we get later on in the year.
Well, I think everyone's in agreement that we are at kind of some degree of an inflection point here now, where of course we all disagree on whether that means the Fed will pause, whether they will signal that they're going to pause, and sort of what comes next. And I think the big thing is when you look at the data, Carol, we talk a lot about this, how when you put the trend together from basically midsummer last year until now, it's clearly the trend that the Fed wants to see. The question is it going fast enough for the Fed to pause? And more importantly, do they really believe that we're going to get back down to those pre-pandemic levels when it comes to 2% targets and the other sort of metrics that they're looking at?
Well, we know the Bank of Canada is pausing, if that's any guide. Like I said yesterday, Canada speaks.
Is Bank of Canada?
Yeah.
They're the bellwether?
They're the bellwether. I'm saying it right now.
We look anywhere we can.
Wow.
Yeah. I look up north to Canada.
The point is they're a new normal when it comes to inflation and where the Fed needs to go.
Remember when Australia was the bellwether a few months ago?
No.
It was.
I can't think that.
Let's go back to Tesla.
there's a super interesting story out on the terminal today. $2 million. If you're in your 30s or your 40s, that's roughly what it costs to make yourself 18 years old again. Of course, we can't technically turn back the clock, but we do have software entrepreneur Brian Johnson. He's made a lot of headlines for spending at least $2 million a year on a team of more than 30 doctors and health experts to give what he describes as the body of an 18-year-old. He was profiled in Bloomberg Business Week. Romain, did you read this story?
I did read it, and I was pretty alarmed by it. He basically wants to be an 18-year-old. He wants the brain of an 18-year-old, the kidneys of an 18-year-old, the teeth, the skin, the hair, the bladder, the penis, and the rectum of an 18-year-old. Those are his words. I'm just quoting him as we do this journalistic service for you. I'm not sure what I'm looking at here. I mean, he definitely doesn't look 45. He doesn't necessarily look 18 either.
Yeah, no, it's a bit like uncanny valley. I'm not quite sure how to describe it. I'm just relieved because when I read that headline, I thought, is this a skin suit? But no, it's just like a lot of
that would be creepy
injections.
But you know what's not creepy is building your own medical lab inside your own home, hiring a 29-year-old doctor to administer all these treatments for you, all at a cool $2 million a year. It
is a contribution to science, so in some ways we should be grateful.
Really?
Yeah, to see what comes of this, what the long-term effects on his body.
It's interesting. We should point out, look, there is a long line of ultra-wealthy people who have gone down this road we've had. You go back decades ago when people were cutting off their heads and basically putting them in these cryo chambers with the idea that they'll be reanimated at some point in the future.
That works, right?
I think they're still in those cryo chambers right now, but maybe I could be proven wrong. Who knows? I mean, I think I saw a Futurama episode on this.
I did see that too, yeah. Okay, well.
Hey everybody, welcome back to the second half session of the live day trading room. So what we have witnessed today is a very, very impressive reversal on the indices and most major stocks. Obviously, if you view my screen here, the S&P 500, the SPY, gapped lower today, putting in a lot of distribution in the morning, faking and getting people to exit their trades, and then you rallied back. Now this gap down was on the back of Microsoft completely missing and reversing on earnings. So we have to keep that in mind that it was weak. Now Microsoft has had an impressive reversal off the low, so the market has certainly moved up. But the S&P has gone basically green on the session after being, actually it's just slightly negative, but the Russell is positive, and I believe the Qs have gone positive. So expectation, this type of reversal makes people a lot more bullish. So the sentiment is probably on the news is going to be very, very bullish right now. Tesla's earnings can still change things, but it's not the type of market mover that it used to be, in the sense that its market cap has dropped significantly. Yes, it's still over 400 billion, but it's no longer a trillion name that it once was, which carried a significant amount more weight. So we'll just have to keep an eye on things here. So right now the S&P has pulled off slightly from the highs, and that's just basically an inverse correlation move of the dollar, but still very, very strong. Excuse me.
Wild trading day.
30 minutes to go for the S&P 500 to try to fight into the green. We're about 0.1% away. You look at what might lead it there. You have financials up at the top, that sector up about 0.6%. Consumer discretionary, too. A lot of that is Tesla as we await earnings. You look down the pack, you see utilities, industrials at the bottom. So, too, is communication services.
Okay, of course, a big part of that flip-flop was a flip-flop in Microsoft, second highest weighting in the S&P 500. That was a big story after the bell that really shifted sentiment overnight. Tesla after the bell today, up about 0.9% right now, heading into that report. Some of the other software names haven't quite recovered the way Microsoft has. Snowflake down about 1% here on the day. But two big bright spots here. One from AT&T, which actually came out with some interesting commentary themselves, which showed some resilience.
Watching the markets here. S&P is just floating up here, really staying in this range. We have to keep in mind now that even with this impressive reversal, let me just remove some of these lines.
This has been a long time coming, and well,
even
it's
with
been
the S&P's reversal. Look where we're trading. Still at and under critical resistance. Now, since we've been trading here, it's likely that the markets are going to want to pierce this level and try to suck in new money. I'm still in the bearish camp that we see lower price action. But if we get some positive earnings results, we could pierce this level and move higher, especially if the volume remains light. And what I will bring to your attention is right now on the S&P, SPY, we're trading about 63 million shares. So we'll probably hit around 80. And then yesterday we traded about 59. So it's relatively light in comparison to the major days. And for instance, when you look at the major peaks here, you can see light volume sessions. And then you roll over. This is education, light volume sessions down here right before the peak, and then you roll over. At the peak, extremely light volume sessions, and you roll over. So these light volume trends are often favorable for float up, but they're they're not very convincing, despite it being an impressive reversal.
For the private equity sponsors, the issuers of the loans, there needed to be a credit spread adjustment that's added to these loans, and we weren't seeing these CSAs come through for the loan amendments.
Well, talk to us as to why we didn't see those sort of provisions made, or were they requested, or were you just guys?
A few names after the bell. The few names that we're watching will be obviously Tesla. I don't have a bias for Tesla. If I had to put a guess, I think it's going to drop. Well, I think it's going to rally a little bit, suck in some money, and then drop. I'll pull up Tesla here. So if we look at Tesla, Tesla's had a pretty decent move off the lows. Been one of the best performing large mega cap stocks of 2023. But honestly, you can see that this has put in a nice little bull flag forming on the 4-hour chart. Now you are coming up into some good resistance. If you look at the daily, you can see you're trying to put in bullish consolidation, which honestly on a technical basis does favor more upside. So I don't have the guts to short it, even though it's had a move off the lows, and considering the drop it's had, you're more favorable to basically go long if it drops. Now I do have short levels on Tesla in the event that we do pop up. Which will be this I'll isolate it down. So basically on Tesla, we have some short levels. If it pops, what we will do on Tesla, and this will be primarily a day trading level where we'll look to scalp some profits, but it can also work as a swing trading level, as a starter position, accumulation position. So we have to be mindful that Tesla has had a technical potential breakout, but it hasn't confirmed, which leaves me a little skeptical considering you've had two kind of positive days, but it is bullishly potentially consolidating. Now, if Tesla pops, this is our day trade and first swing trade level. I will be doing both a swing trade alert and a day trading scalp, but those will be two separate positions. If Tesla goes higher, 178 will be your next level. Now, the implied move on Tesla is anything in the range of basically a 10% plus or minus move. So we'll see if we get that type of volatility. I would love to potentially accumulate more Tesla at 113 or the double bottom. I ultimately do think it's going to go lower and honestly break this level as we progress lower on the S&P. However, I do think that you would get probably this level defended again, this 102 level, for a double bounce, just due to the fact that Tesla still is oversold. Now, some people are shorting it here. I would never short it here. That's just craziness. But we will certainly keep it on the radar. And we'll put the after hours prints on. So the S&P saw a little bit of weakness there, but not too much. The dollar's kind of softening here a little bit. So the S&P is just pulling off of the highs, but still remaining in its bullish alignment. We're also going to be watching Lam Research. LRCX is the ticker. I don't have a play on it right now. It is trading at resistance, but obviously being a semiconductor, it has that potential to, let me just pull it up. So Lam Research is basically trying to test this breakout zone. So it'll be interesting to see if it does break out. Maybe a potential lead for the semis. So it is a big moment for it. But time will tell. So that's another earnings play. We're also watching IBM. So in all honesty, IBM is looking bearish on the chart, but earnings can change that. So if you really look, IBM's actually broken, triggered this bear flag, retraced, rejected, but it hasn't confirmed the bear flag break yet. That's what we're waiting for. Until we get that, this thing could pop up. So if it pops up, considering there is bearish formation occurring, we have two potential short levels. And this would be a swing trade. This would be a swing trade short. Only if we get a pop. Now if we drop, you know, there is this potential topping formation that's playing out. That really takes you down to And then the final stock that we're watching for earnings is, oh no, there's a couple more actually. There's now NOW. There's also Las Vegas Sands, so LVS, and there's CSX. I'm so tempted to short LVS, Las Vegas Sands. Let's pull up that one. You know, I've been so tempted, but I haven't done the trigger yet. But if you look at this extension move, I mean, what the market is basically saying is it's going to have a good earnings report. Okay? So that's what this price action is saying. When the market interprets a stock in the sense that it has to have a good earnings report, it leaves more room for error. In the sense that now that the market is expecting a good report, it has to live up to that. And if it doesn't, that's when you could see sharp pullbacks. So if there's any glitches or any hiccups that the market missed, maybe because the company didn't report it or whatever, which always happens frequently, you could certainly see the stock pull back. Obviously you have support in this consolidation range, but once again, it's certainly a risky play because earnings could pop it. Earnings certainly could pop it. Now if it went up a little bit more, would I play it a little bit more? Yeah, I'd probably short it if it popped really a little bit more. That would be too much of an opportunity pass up. Because right now you're trading into these pivot zones where you bounced off the 200 daily, retraced to this cluster, and then had your larger breakdown. So what this is telling us is there's sellers that are finally break even, that all the way from June of 2021 last year. So it's a very big psychological number, and you can already see there's distribution occurring at this red line, but we're remaining here, which that's why I'm so tempted to short it, because we're seeing distribution, we're at resistance, and it makes sense to short. But perhaps it can increase a little bit more. Let me just see if I can find another.
Which were more challenging. Microsoft, the outlook was poor. The question I have
you can
is,
see there's extra resistance approaching these longer term trend lines, pretty much parallels, so you have two big resistance levels. I'd be shocked if it popped up here, but you never know. That's a short level. If LVS pops all the way up here, short it. Or even honestly, if it gets through this white trend line here, that's a short trade that could be very, very profitable. So let's just flip back to Tesla. Tesla's just chilling out here. Another one we're watching is CSX though. Let me just flip my screen back here. So there's quite a few plays that we're watching. The spiders are coming in. So CSX is interesting because we saw CNI report and they got kind of demolished. They have bounced off of the lows, but they did get demolished. So we'll have to continue to monitor the transports, but honestly, one of the reasons why I think this market is going to be faded and why I think we're going to see lower price action is the transports. I mean, you have the transports still down significantly. They've had impressive moves, but then you look at CNI that reported and it was atrocious. And now you have another transport here that could also be in the same picture. But if you look at CNI, it has had a bounce. Pulling it up. CNI has had a bounce off the lows. But what you're doing here, and this pattern is looking pretty atrocious now, that you've basically triggered a topping formation here that sends you all the way down to this 100 level, 105 level, which is very, very bad. And it's on high volume. And you're piercing the 200. So you couldn't even hold this 200. That is atrocious price action for CNI, which is a major transport stock. And look at the earnings. They beat. So this just shows you that money flow knows fundamentals in this market condition are very limited in the sense that a company can still be a cash cow and doing exceptionally well in the environment, but it's just the environment. Stocks are all about liquidity, and we're not getting the same amount of liquidity. So at first I thought CSX was going to recapture this level, and this just reinforces how much more bearish I am, because we were above the 200 on the bounce. And if you flip at the intraday, you can actually see this, that we rallied above and then we've just bear flagged, broken, bear flagged, and now we're breaking key short-term moving averages and nearing the lows. So bearish price action as transport is not a good sign. That's why we will be watching CSX, which has very, very similar price action. Now, I'm not saying go and short it, because you certainly open up yourself to unnecessary risk. But the pattern is bearish, super bearish, lots of distribution occurring. This is not bullish consolidation. It's too choppy. You have a broadening wedge. Yeah, that's disgusting. You're also losing the 200-day moving average here. So again, you bounced off of this. This was the sympathy collapse because of CNI. So realistically, if this company doesn't significantly beat, which it has a consistent record of doing so, it could just still fall in regards to sympathy. So really there's quite a few on the radar that we are watching. But for now, we'll flip back to Tesla. So the spiders are showing a little bit of weakness into the end of the day. Let's flip back to the S&P. Seeing a little bit of weakness creeping in. So the S&P is seeing a little bit more selling now, creeping in. But you still see some strength in Nvidia.
Tesla amongst a few others. IBM, if you're still into them.
International Business Machines.
Yeah, I think they just go by IBM now.
Yeah, that's
Yeah,
true.
it's cooler. All the cool kids.
I like to keep it formal.
All right. Well, all the cool kids are tuning into us because of Jason Brady, still with us, President and CEO of Thornburg Investment Management, as we count you down to the closing bells. And I do want to go back to the macro. We know the Fed kind of has to shut their mouth for a week until they make this big decision here. Right. Exactly. I think everyone is like hallelujah. But what do you expect when we get to next Wednesday here? Not so much of whether they cut 20 or whether they hike 25 or not, but what they're going to telegraph here with regards to that fight against inflation and whether that trajectory higher in rates might finally be coming to a stop.
Well, I was typing out my latest investor letter on my IBM Selectric, and look,
Katie doesn't know what that is. That's the typewriter.
International Business Machines. Correct. It's international is key.
Yeah.
The Fed is grappling with a market that doesn't believe them, and so I think you have to think of the Fed as performative, right?
Yeah.
What they're saying is what they need to say versus what even they believe or what might happen.
Yeah.
So the fight between the Fed and the market, as I've been looking at it over some pretty long period of time,
So
usually the market wins, but not because the Fed is thinking incorrectly, but because
we're just looking at the Tesla chart, seeing if there's any unusual activity that can alert us of any price action. So far, there's nothing.
Is pricing, as you look at market pricing, I think it's not binary, it's probabilistic. Either they cut or they are staying at the same level with the terminal rate, and so the market kind of is halfway between those things. The Fed's history on keeping,
because we are seeing some sell side pressure just creeping into the market late in the session. So we're seeing a late day sell pressure coming into the markets right now. I'm watching Tesla on my other charts, Apple on my other charts, Nvidia, Shopify, all the leaders, XOM, Valero, natural gas, oil. I have Caterpillar up, Boeing up, so I've got lots of leaders that I'm keeping an eye on to see. I got all the Chinese sectors up. The spiders are selling. We're seeing lots of volume starting to pick up a little bit. Spiders are catching a little bit of a bid. Spiders caught a bid there late into the session. Spiders are catching a nice little bump up, light volume. Tesla's not participating in this rally. So Tesla was not participating in the spider bounce. That's just interesting, probably a little more nerves. In the price action, Apple's caught a bid, Nvidia's caught a bid. So not all stocks participated in that bounce. It was more of a concentrated bounce in the S&P. although you are perking up a little bit now. But Apple's seems to be the biggest beneficial winner of this bounce. It's actually leading this market higher with this bounce. So we have about 4 minutes left. Flip back to the S&P. It's still pushing. Spiders are remaining strong.
That there's a lot to do. The one thing I will say, a lot of investors that I speak to out there are rolling short-term bonds, whether it's treasuries or otherwise. You better match up your duration of what you'd like to achieve, your time horizon, with the duration of your investment. A lot of folks feel like, hey, I'll wait till the 10-year goes back up again. I'm not sure it's going to get.
Yeah, I'm wondering who those people are, because I'm like, I guess they have no liability, so they can just keep doing it over and over. But you're right, for the big institutions, that could come back to bite them. Jason, gonna have to leave it there. Always wonderful to see you and see you in person. Jason Brady there, he's the president and CEO of Thornburg Investment Management. You know what this means, Katie?
Tell me.
Sign for the closing bell. Right. Your favorite part of the day here. We're just about a little less than 3 minutes away here.
Tesla's remaining weak. Weak heading into the last little bit here, considering the S&P has bounced significantly. We have 3 minutes left. This bounce was due to the dollar softening.
Volatility is really stark. Again, the Nasdaq 100, it's going to end down, but it was down 2.5% to claw back.
Basically going
those
tick for tick.
I mean, you're not seeing it in the VIX, but there's a lot of turbulence just in the day-to-day action.
The VIX a little bit higher, and in the Treasury market, some of the buying that we saw in the 2-year, that's now extending into some of the other pockets of the market. We move closer here to the closing bell. We're about to take you to the bell and beyond. Simulcast with Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as streaming on YouTube. Carol, what do you got?
What do I got? What a different tone right now. And I do wonder how the earnings that are coming after the closing bell can once
Spiders remaining
again
near the highs of the session.
We are driven from data point to data point, from earnings release to earnings release. We'll see what Tesla and IBM and all the others, what they do.
We're back on the Tesla chart. It hasn't bounced as much as the rest of the market. Spiders are getting a nice push into the end of the session. A really strong push.
Not good. That's the real economy, right? Moving things around, telling us whether there's demand. I think it tells us a lot.
I'll be honest, I'm a little surprised to see the change in tone in the market. I couldn't point to one single thing that actually moved stocks higher. I mean, I thought this was going to be a day where the S&P 500 finished down 1.5%.
Tesla remains weak, even though the Spiders took out the previous 40 minutes of trading. The market's closing in 6 seconds, so we're going to keep up on the radar all those tickers that we mentioned earlier. We've got 6 stocks that we're paying attention to, and here we go. This is the Tesla chart, so let's see what transpires here.
Down less than a point. The S&P 500 down about 1 point itself. Call that unchanged. The Nasdaq Composite down 22 points, or 0.2%, and the Russell 2000, Carol, right now is going to finish the day higher by 0.2%.
Go figure about that. Looking at the S&P 500, 287 names are higher in this session, 215 lower, and Katie, we've got one unchanged.
And we look at the industry groups, it's a pretty even split. Once again, you have telecom up top, the banks too having a pretty good day. You look at the bottom, the transportation industry group.
So we're watching all 6 stocks, the bigger names, Tesla, Lam Research, IBM, Now, ServiceNow. No real movement yet. Spiders are just still flat. Four minutes and 20 seconds to Tesla.
For example, yeah, shares finished the day down significantly lower as a result.
Spiders are perking up a tiny bit here. No movement in any of the 6 stocks yet. CSX is out. It's not moving. The ticker is not moving.
This company CEO saying that they're going to win share from trucks and drive profitable growth over the long term.
Not too much movement in the shares, though, after hours. I see unchanged. Maybe that's an error on my screen. But you look at how shares have performed over the past year, only down about 8%, so outperforming the S&P 500.
Well, but it's interesting, and we'll look for some more commentary as these numbers come out. And
all right, we've got about 2 minutes left to Tesla. 2 minutes to showtime. Is it going to pop or is it going to drop? I'm hoping it drops so I can buy some. But if it pops, we have our levels. We've isolated them. 166 and 168, we start shorting. And this is a day trade and a swing trade level. Spiders are seeing a tiny bit of weakness, but nothing really concerning. All right. We should start to see a little bit of price action creep in ahead of time.
But he was short of actually calling a recession. And he was like, things are almost back to normal.
Yeah, and I love Mario, but I do wonder that when you see that drop in imports and import traffic, whether he should be a little more concerned about.
He wasn't alarmed. He wasn't alarmed.
But he did talk about that containers were being canceled.
We have an implied range on Tesla of 10% plus or minus. That's a big, big range.
Which was out after the close. It gained in today's session, but it did because the company is putting aside more for provisions, and I thought that was interesting.
I thought the market reaction to that, I was like, what? But I guess it makes sense, right?
But they're being careful ahead of it.
But maybe that's what gets rewarded. If you're careful.
No need to front run anything. That's gambling. We have no positions in any of the names reporting. Ours reported. A couple of names reported yesterday.
I thought it was notable that his commentary seemed to push other companies down more so than Microsoft today.
Right, because they're not Microsoft.
Shares, exactly. Shares like Alphabet. Alphabet reports next week.
Las Vegas Sands.
Diversified company. I mean, I know a lot of people don't look at it like that.
And still
but put that up
growing.
against Alphabet and show me the diversification in Alphabet.
Still growing. CSX, by the way, sees 2023 capex about 2.3 billion.
Yeah.
The estimate was 2.08. So they're spending.
I
They're
got some
planning
more
to.
earnings for you.
Let's do it.
Let's Las Vegas Sands as we wait for Tesla to cross the wire. Las Vegas Sands crossing the wire right now.
Las
Their net
Vegas
revenue
Sands
pretty much
is
coming
seeing a
in
little bit of
slightly below
sell-side
estimates.
pressure.
$1.112 billion, excuse me, versus an estimate on average of
Tesla earnings
$1.18
gonna
billion is
come
what the
out
street
right
was
now.
looking for.
Should be any
They did
minute.
post a loss
for
on
the
an
reaction.
adjusted basis, 22 cents a share here. Not really seeing any guidance here, but the share is only down about 1% here in after-hours trading.
Yeah, remember, this is a company heavily reliant on Asia and businesses
We only
there.
care
So
what
travel
Korea.
restrictions.
Isn't Asia supposed to be doing? I guess we're going to find out.
It
after
is.
They come back for the Lunar New Year.
Well,
Right.
the company's
Good
chairman and
come
CEO said, well, travel restrictions and
Tesla's
reduced
seeing a little bit of
visitation
upside.
continue to impact our financial.
Very minimal. Very minimal. Las Vegas Sands is selling a little bit.
Deeply enthusiastic about the opportunity.
Down about 50 cents. Spiders are flat. Dollars flat. Everything just seems very eerie and quiet. Very eerie and quiet. Something big is coming.
That compares with the estimate of $10 even. Revenue. Let's go to
I'm watching all of, I got all 6 charts up. We're watching. So far there's nothing. We've got about 179 other traders also watching for market movements and insights. So we have a team behind us waiting live.
Yeah, and it's interesting to see, look at Lam Research's results, of course, against the backdrop. I think you mentioned it
Their
earlier.
net income doubled to 12.6 billion.
And the idea here that for the chip equipment makers, that maybe they're not necessarily seeing the sky is falling, and like a lot of them are
Tesla's starting to
blunted
see a
to
little bit
certain
of
extent
Tesla's
by
falling.
this,
Tesla's falling a little bit.
of the end product.
To that point,
They say the first move is the wrong move, but let's just wait.
saying that given the decline in wafer fab equipment spending expected in calendar year 2023,
It's a beat. Top and bottom line beat. Get ready to short Tesla.
While preserving critical R&D, Lam is focused on accelerating strategic priorities to capitalize on the semiconductor industry's long-term growth prospects.
This is all about margin protection. I feel like doing what you need to, whether it's cut workers, unfortunately.
If we get a pop on Tesla, we will short.
Taking the steps, cutting back on real estate, doing lots of different things.
Stock is not moving much. It's basically not really moving.
$1.19, the street on average is looking for $1.12. That's the main headline crossing the wire right now on Tesla. Going to take a little bit of time, of course, to dig through some of these numbers, guys. As we know, this is always sort of a complicated report here, but at least looks like on the headline figure, adjusted EPS beating slightly by roughly about, looks about 7 cents a share here on the 4Q adjusted EPS.
And it looks like investors are still deciding how to feel again as we await sort of the drip of information. We see that fourth quarter free cash flow was $1.42 billion. The estimate there was for $3.13 billion. So a bit of a miss there as we continue to watch these numbers roll in.
The big thing I'm really interested in seeing is just how much they were able to stoke demand
Everyone's
by
waiting
cutting
for this
prices.
big pop.
But more importantly,
And
how
what have we
much,
got?
if at all, that ate into
Nothing
profitability.
yet.
Yeah, and that was toward
But
the
we'll see.
end of the quarter. So,
still
I'm
have
more interested
Elon.
on the outlook.
IBM's popping. IBM is popping. It's perking up. We have our levels on IBM. I'm not going to flip to that chart because Tesla's a bigger impact. And let's be real. Tesla over IBM? Come on.
Is 40 pages, and you have to go through that to
IBM's firing 4,000 people.
Great folks over at Bloomberg already got it down. The long
4,000 people. More layoffs in the tech. It's bullish for the stock. It's ripping. We have extra money to pump into the stock price because we're cutting down on expenses. Who needs the people, right? That's the market, that's sentiment of the stock market. It's just craziness. Craziness. But that's terrible. 4,000 people, my heart goes out to you. It just shows you that you have to be aware of the economic conditions. Tesla's pumping now. Here we go. Tesla's pushing up a little bit. Las Vegas Sands still remains weak. The SPY is pushing up. 148 on Tesla. It's approaching first resistance, but we're not touching that level.
Looks like shareholders seem to like, again, those cost-cutting measures that we've been talking about, those job cuts. Shares only up about 0.9% or so, but bouncing around.
Yeah, bouncing around here, and I think when we get to this idea here of sort of how IBM has really tried to transform that business, and the idea that they at least see themselves as someone insulated from some of those outside pressures, the idea here of the cycle that they're in right now is a little bit divorced from, I guess, the on-the-ground economic conditions. Maybe that benefits them. Eventually, to see what they say on the call.
Well, to that end,
after
Romain,
hours.
the company's CEO, Arvind Krishna,
Up about 3.3%. I believe they're guiding up their production. IBM is pushing up.
To the star of the show, and that is Tesla. Adjusted EPS looks like a B.
IBM's up
Cash flow metrics,
3.5%.
free cash flow looks like it is a miss. The company's sticking by that 50% growth rate target, and also saying that they have sufficient liquidity to fund their product roadmap. Joining us right now is Ed Ludlow, co-host of Bloomberg Technology. Ed, what jumped out at you in these earnings?
Yeah,
IBM's
I go
up
straight to gross
3.5%
margin at
after hours.
25.6% in the
Lam
quarter because
Research
I know
is
that's
falling,
what the
so
street were looking
interesting.
for.
I'm
The
really
forecast was
paying
for
attention to the semis.
25%,
Everyone's
and they
focusing on
got slightly
Tesla,
above
but
expectations
Lam
on that
Research, semiconductor, potentially breaking out of that bullish inverse head and shoulders, which I'll pull up. let's not forget that everyone's focusing on Tesla, but when the semis are the most important, look at this semi drop so far. Look at this Lam Research. It's a little drop, but it's starting to creep in. And the importance of this is the fact that what do we have? This inverse head and shoulders pattern that everyone is buying, getting bullish. So this is critical to know that, are we going to fail to break out of this pattern? Because a lot of people have been trying to front run it and buy ahead. But let's watch Lam Research, because this is now a nice fall. And this is important for semiconductor health. Semiconductors lead the economy. And ultimately this price action, even though it has a smaller weighting compared to Tesla, it's arguably more important because it dictates the price action of the market more likely. And look at Tesla come in now. Starting to come in. Let's flip to the hourly chart. So I watched Lam, and ServiceNow is tanking. Ooh, ServiceNow is disgusting, getting wrecked. 8.8%. Let's take a look at ServiceNow. ServiceNow, look at this drop. Boom. Let me see if I can isolate any levels for us. That's nasty. Ouch. Lam Research, IBM's pulling off the highs, so things are getting a little disgusting here. Once again, to the downside. Ooh, Lam Research. Ooh, ServiceNow. The time is now. The time is now. So I really don't have any levels. There's a potential scalp trade around the 394 level. 394.68, which is around, let me just see here, about this 394.5068 level there. But Tesla's really not seeing much. Lam's still coming down. Lam's down about 3.26% in the after hours. ServiceNow, we'll keep an eye out on this. Look at that, that's down substantially. CSX is popping. CSX is popping.
Chief Technology Analyst Anurag
So
Rana.
Tesla's
and
really not
Anurag,
moving
it
anymore.
looks like a beat on revenue, of course.
Lam Research still remains down.
Forecasts and plans to cut about
IBM's gone negative, so IBM's going negative. This is, things are starting to heat up in a very negative way. Look at Tesla. Just looking at Tesla there. But IBM, I'll pull up IBM, just give me 1 second. ServiceNow is falling more. Check out this reversal on IBM. So that's pretty bearish, the fact that now we're pulling off. So Tesla's not moved much. Obviously earnings, what we saw with Microsoft was they had technical difficulties because they were crushing the stock during the earnings call. They shouldn't have had the earnings call. The stock would have been up 4.5%. But they had the earnings call and the stock ended up falling significantly and reversing the gains. So we'll see what happens with Tesla's earning call. Obviously we'll hear from Elon. Maybe he'll hop in one of the Twitter spaces. There's nothing really outstanding in terms of the report. There's nothing really red flag. But the forward guidance, as we saw with Microsoft, was horrible. And there's probably a lot of people thinking that the forward guidance from Elon is going to be horrible. But he has given some horrible forward guidance already. So perhaps maybe this is the turn for Tesla. Tesla turn. And let's keep in mind, anyone looking to short this stock, he could announce a Twitter CEO on this conference call and we could see it, boom, up 10% or more for that matter. So he always has that ace in his pocket, which makes it dangerous. And you know Elon. You know Elon. He's a businessman. And obviously, he's expressed his I wouldn't say hate, but disinterest in people that short his stock, because Bill Gates tried partnering with him, and obviously he did not allow that with his whatever was a $600 million short position, I believe. Might be off of a few million there, but something in that range. But anyway, right now there's not too much movement. Let's flip back to Lamb. Lamb is still dropping here. So significant. This is probably more important for the market, in my opinion, just the overall health of the semiconductors. It looks to be that this pattern is failing. So that's terrible for the bullish formation that a lot of people have been buying ahead of in terms of NVIDIA, SMH, and the likes of the semis. And we all know that semis are a leading conductor. So they conduct the energy of the stock market, literally and physically. IBM's still ticking up positive. But let me just run down some levels. So I'm not going to be doing the stream up until the conference call, which is, I believe is in 30 minutes to 60 minutes. So I'm not going to do the stream until then. But I'll give you my levels, what my expectations are, and what I'm watching. On Tesla, if we look at the Tesla chart here, on Tesla we can see that we're trying to perk up on the hourly here. I will only feel comfortable shorting if Tesla had a direct move into this 166.25 to 168 level. If we can do a straight shot in there, I'd feel comfortable. If we fell basically into the support, straight shot, I'd feel comfortable buying for a day trade. If it's a swing trade, I would love to see this gap fill at 113 and double bottom. I would be accumulating a swing long at these two levels if it fell. Really, that's about it for Tesla. I'm not going to play IBM in terms of, actually, if IBM popped, which I'll pull up the chart here. If IBM pops up, basically this is 147 out short, 149 secondary short. That would be a swing trade, so I don't mind holding that overnight. Let's take a look at Lamb. If for some reason Lamb Research fell down to this area down here, this 429, which is a pretty long way, I'd feel comfortable buying it for a day trade. If we look at now, pull up that chart, basically you've had a big drop and a big bounce, so I'm no longer comfortable buying this 394 level. If it was a day trade, I would have to see it now come down to 382, and then if it was a swing trade, I'd likely buy at this bottom zone here, 351. But those are pretty big hefty drops, and it would take a substantial amount of downside. So I'll just leave Tesla up here for a second. There's really no movement on Tesla. The S&P actually is down in the after hours compared to where it closed, so that shows that the overall earnings have been negatively affected the market in terms of liquidity. Just going to see if there's anything else that I need to touch base on for other stocks. I'm just going to scroll through a few here. Just give me a second while I get to the top of the earnings. So far some Tesla bulls are pleased to hear what they've seen in the report, but it seems that Tesla bulls are always pleased. I do believe that Tesla owners have probably the biggest bias of their stock. And personally, that's not how I trade, by having a bias. I love the company. I want to own it at the cheapest price possible. That's my bias. Another important one, obviously, that was down today was ADP. scrolling through to see if there's any other ones that I can quickly pull up a chart for. Raymond James Financial seems to be up on the session slightly. Let's check URI. United Rentals, that's positive on the session, so that's interesting. URI, ooh, URI is actually coming up into a nice short level. So just give me a second, let me do some work on this chart. I may have another trade set up. Yes, I actually will have another trade set up. Just give me a couple minutes here while I do some work.
In 2022, in terms of production, you think 1.8 million cars is in the cards?
I think it's achievable. You know, when you look at the price cuts that Tesla, provided in early January to make sure that in the U.S. many of their vehicles qualify for the Inflation Reduction Act. Now Tesla in Europe, especially in Germany, is qualifying for the full 7,000 euro subsidy there. And Tesla also cut prices again in China for the second time in 3 months. For demand there. So I think 1.8 million vehicles is definitely achievable, given that Tesla's price cuts combined with the incentives should spur demand for more buyers.
And Seth, I'm looking at a report that you put out earlier this month where you said that the fair value estimate for Tesla shares is probably around $220. If that's the case, shares are materially undervalued. We're trading around $144 in after-hours trading. Sifting through the numbers that we got today, would you say that Tesla shares still look undervalued relative to the fundamentals?
I think so. You know, I think when we have seen the stock sell off 70% during 2022, that the market went from overly bullish to overly bearish, and the market still remains overly bearish on Tesla's long-term growth potential, even despite the recent 40% rally that we've seen since early January. So I still view the stock as undervalued. I still think that even though we've seen a rally, there's still a lot more long-term growth than the market is currently pricing in.
All right, well, let's unpack that and get behind, I think, what led to the sell-off that we saw last year. Based on your own research and your own observations, Seth, how much of this had to do with the fundamental nature of the business with regards to selling cars, pricing, margins, et cetera, and how much of this had to do with the antics of Elon Musk and maybe some investors becoming uncomfortable with the leadership?
Well, given the tremendous sell-off that we saw once Musk closed the Twitter acquisition, I do think that at least led to a lot of the negative sentiment that drove the stock down in the fourth quarter.
So,
however, you know, I think some of it was
looking
the market.
at this URI chart, United Rentals, it has popped on earnings, which is obviously good for the stock. Now, what I'm looking for is basically a pierce of 414.99, pierce of this green level. Pierce of this level, and we will start accumulating a short. Let me just go to a smaller time frame. Adjust this chart. So we short at 415. It's a whole number. It's a pierce. Shorting at 415 URI. Tesla still really, there's no movement. Service now is catching a tiny bid. Let's flip back to Tesla. Really no movement. Just gonna scan through to see if there's anything else on the radar. Ooh, another big loser on the session. This is pretty important too. So this is really important. This gives us a great indicator to the overall economic health. I mean, I'm surprised I missed this stock on the earnings, but we see it now, and basically we're looking at LC, Lending Club is getting demolished. Let me just look up the Lending Club market cap. Yes, it's about $1 billion there. So it's about $1 billion market cap, but it is getting demolished here in the after hours. So basically Lending Club has gap down here 9%, so that's pretty negative.
Production set to start this year. We've heard that before, of course. And of course, a lot of people looking at the semi. Does that actually become a material for the fundamentals anytime soon?
I don't think so. You know, semi, I don't expect to have that many volumes this year or next year. Same thing with Cybertruck. So, but if you're looking 3 or 4 years down the road, then I think it becomes a much more material part of the business.
All right, Seth, I really appreciate you taking time on a busy day like today. Seth Goldstein there over at Morningstar as we continue to break down the earnings that we got out of Tesla, and more importantly, we continue to break down the leadership. We can't talk about Tesla without talking about the man himself, formerly the richest man in the world, not necessarily the richest man in the world right now. We're going to talk about Elon Musk and his leadership of the company after the break. This is Bloomberg.
Tag on the
So basically the market's been pretty muted. We have seen a little bit of movement in some of the names. It's net negative movement across the earnings. The S&P is down. I'm still watching Tesla. I'll be watching here after the earnings call, but probably going to call this stream to an end because we're just waiting for a reaction and there's nothing coming. But other than that, levels, and I'll close off the stream as we wrap this up. Congratulations on the day trades that we did today. And we'll see if we can basically 6 for 6 is a pretty impressive day trading. I must admit I'm even dumbfounded by that, but sometimes the market gives you lots of volatility, and that was certainly the aspect and main theme of today with gap downs and reversals. And I can probably say with confidence that we're likely going to continue to see this volatility. So hopefully we can continue to trade together and make profitable trades. But we just always have to be humble and try to respect the price action. Other than that, I bid everyone farewell.
I'm Katie Greifeld. Let's take a look at how markets performed on the day. And at least in the bond market, you did see a rally. Most of that was in the front end of the Treasury curve. You have 2-year yields moving almost 8 basis points lower. The 10 years, the 30 years, they saw a little bit of love, but really not much to write home about. Not much to write home about in the stock market either, as we awaited those big earnings report from Tesla and IBM. You can see the S&P 500 basically flat on the day, a little bit to the downside. The NASDAQ 100, though, saw a little bit more selling those big tech names. That index finishing about.
I'm going to turn my mic off. I'm going to turn my camera off. I'll leave you with Bloomberg. There's a huge stock buyback. Sorry, just 1 second.
All right, Katie, I just want to bring you some quick breaking news before we get back to those Tesla earnings. Chevron announcing a $75 billion stock buyback program. Those shares moving higher here in after-hours trading. All right, let's get back to Tesla. The share has been all over the map. They are incrementally higher here in after-hours trading after they beat on a lot of key metrics. And, well, a lot of people focus on the numbers, but, of course, we know people are also focused on the on the CEO of that company, Elon Musk. Bloomberg's Max Chavkin writes in the latest Business Week column that Musk's sense of humor and quest for laughs is hurting Tesla. Max joins us right now. Normally I don't editorialize, but I didn't know he had a sense of humor. I mean, I look at his jokes. I don't necessarily laugh at them. But in all fairness, we know this has been a company that pretty much from the early days has been driven by his personality, for better or for worse.
Yeah, absolutely.
So we'll just leave the mic and cam on. Off of me, but we'll leave it on our dog. You can watch in Bloomberg and the charts just to see if there's anything interesting that transpires on Tesla as the call approaches. If anything wild happens, we will come back on and hop on and try to execute some trades and position ourselves accordingly. But for now, I'm going to hop off the mic. As I gave you the levels on URI, just a heads up, it is approaching that level. That 415 level is the short level. So URI short at 415 is certainly a positive area for accumulating a swing short. Okay, accumulating a swing short. Other than that, I'm going to go silent on the mic and we'll wait for that Tesla forward guidance and earnings call.
Kind of mugging for the camera, mugging for his Twitter audience, and I also, at times, attacking what many of us thought of as his core customer base, these kind of left of center, kind of liberals in the suburbs. Instead, he's sort of playing to the crowd, this kind of like right-wing Twitter crowd, and that's where the potential damage comes. And when you talk to Tesla owners, they'll sort of be sheepish about it. They've gone from being proud of this thing to being, like, maybe a little bit embarrassed.
I feel like this transition, though, began a while ago. I mean, I know everyone sort of pegs it to him getting involved with Twitter, as an owner with Twitter, but I mean, you kind of saw this. I mean, he's been very public about some of his political views in the past, and the veneer, I think, of what he built, I think it's sort of worn off. Now, whether that means people don't like Teslas anymore, that's a whole other story, but I think certainly people looked at him and saw, okay, maybe he wasn't exactly what we thought he was.
You know, a lot of us who cover the company spent the last week listening in on this trial that's playing out, a lawsuit over the 2018 420 funding secured tweet, and that in some ways was kind of the beginning.
Yes.
There was the spat with the cave diver, and you kind of had this thing where Musk was sort of using his ability to command attention, to attract attention, and while that was happening, Tesla kind of against all odds became a really sizable car company.
Yeah.
And so I think a lot of folks who followed it would say, okay, now it's time to focus on that part of this, maybe less on the attention-getting aspect.
Does he want to, though? Because I feel like between SpaceX, which we know is doing relatively well, at least based on the latest funding round, and then whatever the heck he's going to do with Twitter, he seems like he has a lot of other interests. And at least Tesla seems to be the oldest of that interest. Is he ever going to move on?
Well, we don't know. And I mean, I think there are people who, Tesla investors particularly, who would desperately love to see him, hire a CEO of Twitter, maybe spend a little less time doing, what amounts to customer service. Today he was spending time, talking to like a right-wing talk radio host who was, complaining that he's being shadow banned. And if you're an investor, you're like, Twitter Twitter is a 44, maybe probably a lot less value company. Meanwhile, Tesla is one of the most valuable companies in the world. You know, maybe you should spend your time there. And on the other hand, you know, Musk does what he does, and it has worked for him at times. He does continue to have a pretty big following, so you know that's the counter argument, and I guess we'll see.
Well, I want to go back to your Business Week piece because I live on Twitter, so I know what this headline means. But tell us what this epic quest for LOLs actually looks like.
The epic quest for LOLs is Elon Musk, you know, tweeting these kind of vaguely gross memes, mixing it up with these kind of far-right meme accounts, cat turd, if that means anything to you. You know, it's not seemly of a public company executive, and in a lot of ways, Musk is like, you know, former President Trump. In some ways, he's like sort of breaking the norms of what is considered acceptable in a CEO.
He steals a lot of memes, too. That's a big bone to pick on Twitter.
Yeah, that is a thing. But although memers are constantly stealing each other's memes, so maybe he's just part of the culture. But I do think there's this question of, you know, the average Tesla, you know, customer, you know, I think of as like a dentist in Scarsdale or in Marin. You know, like this is like a wealthy person who, you know, is interested in saving the planet or interested in having a high-end car, and they don't necessarily, you know, follow memes. And this stuff is potentially more harmful than helpful.
It raises a question, though, too, about what the product is supposed to be, right? Because in general, a lot of what we buy, we just kind of buy agnostically, right? We don't really look into the CEO's background or anything. As long as it's what we want and it fits our general overall ethos, that's fine, right? Like nobody's going and looking at a Ford F-150 and saying, well, gee, I wonder what Jim Farley thinks about, you know, X, Y, Z. But he sort of put himself out there as that. I guess my question is, why should we push back on that? If this is what he wants it to be, and he's built the company up, and at least for right now, he's out front, at least in terms of EVs go, why should we complain?
Well, you know, I think it's anybody can complain or cheer him on or whatever, but the stock has lost, you know, 65% of its values over the last 9 months or so. It has gone from being, you know, the most valuable company in the world to not the most valuable company in the world, and it has a long way to fall potentially.
Is that because liberals stop buying cars or something?
No, there's a huge, there are a bunch of issues that have nothing to do with this, and that's what's so interesting. I mean, while Elon Musk is kind of torching his own reputation in real time, the auto industry has caught up. You know, you brought up, you know, Ford, for the Ford electric, you know, F-150. They beat Elon Musk to market, and we're seeing, you know, increasing number of, you know, auto industry, normal car companies with compelling electric vehicles. And, you know, Dana Hull and my co-writer on this story, and I talked to folks who cover the industry, and, you know, they're saying, like, it's not clear that Tesla has the market leader anymore. And that is not a time when you want to be, you know, attracting controversy, or at least you wouldn't normally think that's the time you'd want to be courting controversy.
Max, this whole time I've just been thinking about you thinking of the quintessential Tesla owner as, you know, a dentist in Scarsdale. But I guess the question I would ask on the other side is, what if, you know, this untaps a new source of demand? What if the people who love these memes are eating it up? Could they turn into Tesla owners?
Absolutely, and I think that is one of the counter arguments. That's what you hear when you talk to Musk fans. They're saying, well, he's sort of pivoting to a broader audience. You know, Republicans buy a lot of pickup trucks, right? And that's the product that they've got coming down the pipe. On the other hand, you know, I'm not sure that the typical pickup buyer is invested in these memes either. And that's the thing. Like, you're not really seeing a lot of lift, you know, on the right for Elon Musk. Yes, like Tucker Carlson is talking about him, but when you look at sort of like opinion poll numbers, when you look at, you know, the prices falling, frankly, you see a lot of signs of customers not necessarily embracing this new look.
Well, and just real quick, let me have a few seconds here. In a hypothetical situation, if Elon Musk were to step aside, a new CEO comes in, what do you think their investor reaction was going to be? Is it going to be negative because the man who helped build this is gone, or is it going to be positive that maybe they have someone who's a little bit more of a traditional CEO?
So for years and years, we've said basically, if Elon Musk stepped down, that would be a disaster for Tesla. We've been writing articles about key man risk. You know, the fact that this company is so closely tied to this man. You talked about normal car companies. Tesla spends no money on marketing. It's all Elon Musk. So in that sense, I think it would hurt him. But when you talk to, you know, analysts, you're starting to hear the other side of this, which is that maybe it would hurt them, but maybe not that much, and maybe not as much as it would have hurt them, say, 2 or 3 or 5 years ago.
Max, I'm so bummed to say we have to leave it there. Great conversation. That is Bloomberg Businessweek columnist Max Chafkin. Thank you so much. Coming up, messed up. That's what Elon Musk and some EV makers are saying after learning that their cars might not qualify for the federal government's tax credits. We'll have the details next. This is Bloomberg.
Earnings coming out and a broader focus on the EV makers, which of course includes a lot more companies than just Tesla. Tesla, Ford, General Motors, they may actually be missing out on certain tax credits because some of their models don't have the proper battery content requirements. Tesla's Elon Musk, of course, not happy about it. He's never happy. He's always saying, oh, this is messed up. You're hurting Tesla. Joining us right now to talk a little bit more about this is Bloomberg's Sean O'Kane. And Sean, let's just be clear here. These rules apply to all the automakers last time I checked, and it's not just Tesla being X'd out. Walk us through here some of those requirements, because this is about the size of the vehicle, the weight of the vehicle, where it's assembled, the size of the battery, the cost of the vehicle, et cetera, et cetera. Some of those cars that Tesla makes don't actually meet those requirements. What's the issue?
Yeah. How much time do you have? I think you could probably nest the requirements a couple different ways, but I think the most important is that they have to be assembled in North America to be eligible. That's the first thing, sort of right off the bat, in order to be able to get $7,500 credit. And beyond that, starting in March, we're going to have actual battery requirements, content requirements about the makeup of the battery pack.
Right.
And really, it's just a matter of trying to figure out when those are going to go into effect. I know that there was a proposal from Senator Manchin earlier today about maybe trying to retroactively disqualify some of these cars from that credit, but it's really kind of a wait and see thing. And one of the things that we've seen over the last couple of weeks is that a lot of these companies are trying to rush into this sort of 3-month period where it seems like there's maybe a little bit more wiggle room, and try to get people to buy now before some of those content requirements, which are definitely more strict, as you can see on the screen now. And those increase sort of year on year after that too. So they start at 40% and 50% for the different minerals and the components, and then they go up every year. So that's why there's kind of a rush to get people into the cars now. And one of the reasons why we saw Tesla in North America cut costs so dramatically in the last couple of weeks to get one of its models in particular, the Model Y, to be eligible, or not to be eligible, to basically give the cut straight from the manufacturer.
So Tesla didn't get this tax credit. He's upset about that, Elon Musk. Others did, though. Who are some of the competitors to Tesla that did get this all-important tax credit?
Yeah, I mean, we have. I think one of the companies that probably benefits the most is General Motors. It is a company that was already sort of discounting the Bolt EV and the Bolt EUV, which is its two sort of most affordable electric vehicle models, and those are going to be eligible on top of the price cuts that GM was already doing, and that's probably, that's got a chance to become some of the biggest market share eater, just because that's going to be a really competitive price for what is a really capable vehicle, if not a very flashy one.
Yeah.
But it's really mixed too, because General Motors owns Cadillac. Cadillac's Lyriq SUV, which is coming out, is also one of those ones that's caught in this sort of middle ground between, there are essentially two tiers, one's for non-SUVs and one's for SUVs, and the Lyriq is sort of caught out in the middle, like Tesla's Model Y is and like the Mustang Mach-E is for Ford, where they're not eligible for the credit because they're not really considered by the definition of the regulations the Treasury is going by to be SUVs for whatever reason. So there's just, it's been a lot of confusion for a lot of people over the last couple of weeks, and I don't think it's going to get any easier, honestly.
Yeah, certainly. So it's something they need to sort out, particularly as they try to push everybody into SUVs. You got some of these states out here basically requiring it now, Sean. Great reporting, Sean O'Kane here on some of the new rules here affecting whether you get a tax credit for when you buy an EV. We do want to get to some breaking news. This also on Tesla. We're learning now that the company has entered into a new credit facility with Citibank, a $5 billion revolving credit line for up to $5 billion, and there is a commitment that they could boost it by an additional $2 billion, so $7 billion in total revolving credit. It looks like this is being led by Citigroup. I should just point out Citibank, Deutsche Bank, and a few other companies also on board with this. So I guess just a little extra financing here, Katie, to kind of keep the wheels greased.
A story that we're going to continue to keep an eye on, but we're going to keep our focus on EVs for this entire half hour. Public transportation advocates, though, say that the emphasis on zero-emission cars has been overshadowed by greener alternatives. Joining us now is Bloomberg's Skylar Woodhouse, who covers transportation. So we hear a lot from EV advocates talking about sort of the climate solutions that these EVs actually possess. But when you think about public transportation, not one we hear about too much. Is that just because it doesn't have as vocal advocates?
I think when you look at the U.S., you only hear about public transit in major cities, whether that be San Francisco, New York, L.A., Chicago. But if you're in a suburb, you're not really thinking about taking public transit to go meet up with your friends or to go to work. So in the broader context of the U.S. just has such a emphasis on car culture outside.
Hey, everybody. Just a quick update here. I'm shorting Las Vegas Sands here at 57. 57 short Las Vegas Sands. Swing trade position. So we just shorted that. LVS is the ticker, Las Vegas Sands at 57. I did issue that as a swing trade as well. We gave you the parameters. We were looking for a pop above this key trend line. And then if you actually look on the daily, it's a really intriguing chart. But you can see, let me just pull it up on my other screen here. You can see this beautiful trend line. Sorry, this is the right pivot. You can see this dual factor resistance, pivot, 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 and that's what you're coming into on a massive, massive overbought scenario. So it is a starter position on LVS, but we are short. Other than that, Tesla hasn't moved much. Lam Research is slightly off the lows. ServiceNow is off the lows. IBM is actually turned negative. So let me just pull up IBM because, again, that was one that just moved up and made a high, pierced this level, and now it's reversed. So it's sandwiched in between the two moving averages, but you are testing these major pivots. If you lose that level, could be a big downside move. So basically tomorrow we'll be looking for a confirmation break of this white trend line. If we get that, this pattern likely heads down to at least this, probably this 127 area, possibly gap fill. So it will be a good short trade, but I'm going to wait for confirmation myself, but it is a good bearish pattern to potentially short. Other than that, I'm going to flip back on the mic and go silent. But we did alert you to that Las Vegas Sands short. Okay, and that is a swing trade, so I am holding it overnight. And if you want to find out where I cover and where I take profits, or where I add if it keeps going higher, definitely sign up to our Trading Capital swing trade service on our website at tradingcapital.ca. I'm going to go back silent on the mic, but I'll alert you if I hear anything.
Yet, stick with us. We're going to set you up for what folks are going to be keeping an eye on tomorrow. This is Bloomberg. central bank rate decision there. A central bank, of course, has been a little bit challenged as of late.
It'll be interesting to get that report again after we saw the Bank of Canada this morning. And then the focus turns hopefully to some earnings. We get some earnings out overnight, I know.
Yeah, we'll start off in Europe. I think we're going to get SAP, of course, a big software company. I'm more interested in that because we'll get more of a read here, I think, on what we heard out of Microsoft, but maybe a little more concentrated on business spending. And
then the focus turns to the U.S. We get some big data tomorrow. Finally, we get that GDP print expected to come in quarter over quarter, 2.6%. We're also going to get jobless claims. A lot of focus on that reading as we continue to talk about this tight labor market.
Remember after those first 2 quarters in 2022, we had the negative sign in front of GDP. Everybody, this is a recession. And then you had the nerds at the NPR saying, hey, we're the only ones who can call it a recession. We rebounded from that pretty good. I mean, right? You had 3% in the third quarter, and it looks like if we hit 2.6% for the fourth, that puts us at an annual rate of right around 2.5%.
So maybe that was the recession. It's going to be interesting to hear if those nerds, as you call them, actually confirm that. But
yeah, they're lovely nerds. Before the bell, a lot of earnings. MasterCard, I'm interested in that. You're going to get a few of the airlines, including Southwest, JetBlue, as well as American Airlines.
I cannot wait to hear from Southwest, that is, especially after that holiday period that they had so ugly. I know that you were all over it across our air.
We heard from, of course, Texas Instruments yesterday. We're going to hear from Intel tomorrow after the bell. Another big earnings report there, along, of course, with KLA and Visa as well.
And this all, I don't know, it feels like other than that, we're kind of done with earnings this week, but next week is
You're done with earnings?
Yeah,
I think we have quite a few more.
Yeah, that's true. I know. I'm getting too excited.
Katie Greif will take it next week off. Don't worry, folks. The rest of us will be here. Really appreciate you watching Bloomberg Markets to Close here on this Wednesday afternoon. Bloomberg Technology is coming up next, only in the United States. What comes on outside of the United States? Do you know?
Asia Daybreak, right?
There you go. Have a great evening. This is Bloomberg.
We have only 8% of the ocean protected today. And our Earthshot is, as Patty said, 30 by 30. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
I'm Caroline Hyde at Bloomberg's San Francisco Bureau.
And I'm Ed Ludlow. This is Bloomberg Technology earnings. Tesla, IBM layoffs. We know the stories, they come thick and fast.
They do, and the fact that we had such a volatile day of trading but managed to push off those lows. Microsoft didn't manage to hold us down, but we've got to get to some of these earnings that still come after the bell. Tesla, one of them, accelerating cost reduction plans as profit, it tops analyst estimates.
Plus, the Senate takes up a bill to ban TikTok nationwide after dozens of universities take action to block the Chinese-owned app.
And the space company Rocket Lab lifts off from the Virginia space area as its first US launch. Could this become a SpaceX of small payloads? First foremost, let's get to these markets, because as we said, it had been a pretty volatile day and we'd been off by several percentage points. We actually managed to close basically flat on the S&P 500. Remember, the S&P on track for its best January since 2019. We question some of those gains as we get to grips with really earnings across the board. NASDAQ off by 0.2% as Microsoft weighed down somewhat after its earnings, managed to not live up to some expectations with terms of its revenue. MSCI All Country World Index actually managing to be slightly on the higher side on the day, but basically flat as well. Moon Music cautious as we anticipate what the Federal Reserve does after the Bank of Canada, of course, starts to say it will end its rate hiking cycle. Let's move it on and look at what's happening in terms of the US dollar versus some risk assets. I'm looking at Bitcoin, of course I am. We're back above 23,721. We are at the highest level now since August of 2022, Ed.
Yeah, look, earnings continues and Tesla's the one we've been waiting for, partly because there are so many headlines all the time, but partly because this is a global company with global vision of what's happening with the consumer. Tesla put a lot of emphasis that its China plant was where a lot of the problems were, yet comes straight to after hours reaction. We bounced around and the market wasn't really sure what to make of it. Top and bottom line beat, I go straight to fourth quarter adjusted EPS, $1.19 a share, because slightly above expectations. The big takeaway, I suppose, beyond that is Tesla committing to this compounded annual growth rate of 50%, saying they'll do around 1.8 million units in production 2023. Let's get straight to Bloomberg's Sean O'Kane over in Austin, Texas. Sean, give us the main takeaways from this earnings print.
Well, I think one of the big things is that we realize there's maybe a little bit of a hit to the margins, but I think not as much as people are expecting. It's obviously not the kind of margin growth that Tesla's been working with over the last couple of quarters, but we have to remember that their biggest cuts that they've made to their pricing came after Q4. So I think there's going to be a lot more of the margin story to be told when we get to the next earnings call. So from this one, I think one of the big things we're looking at is really just, how much inventory they left the year with, 16 days of inventory, the most that they've had since 2018, exiting a year, and those troubles that they had in China.
Sean O'Kane, thank you for the breakdown. We've just got some breaking news coming from another key technology platform. You all know it, Meta Platforms, making its decision, ending the suspension of Trump's accounts. Well, we understand they reinstating Trump's Facebook and Instagram accounts after 2 years, of course, of being banned from the platforms. Says it's ending the suspension of Trump's accounts across Instagram and indeed across Facebook, following, of course, what happened on January 6th on Capitol Hill back in 2021. We'll have more of that a little bit later in the show, and indeed Digital World acquisition shares are falling 3% post-market in reaction to that. But let's get back to the story of the day when it comes to Tesla, and of course the numbers that we got out from the company and profit beating. Tasha Keeney, we're pleased to say, ARC Director of Investment Analysis and Institutional Strategies, is with us. And Tasha, of course, you're bullish on Tesla in the long term, in the here and the now, the production focus. Is there the demand to meet it?
Well, you're absolutely right. Our focus is over the 5-year forecast. Tesla's our top position in our IRKQ ETF. But so in terms of, this production goal, they did mention, I think if you go back to 2020, they're still on track over, a number of years to meet their 50% compound annual growth rate. I think that the fears of, margin and demand troubles are pretty overblown. Our research, we've used Wright's Law to forecast Tesla's gross margins over time. And basically, for every cumulative doubling in production, you get a corresponding reduction in price. We also know that they're unveiling a new vehicle platform, which should be roughly half the cost of the Model 3 and Y. I think that could be a custom-built autonomous vehicle. That's going to help margins. It's going to give a huge bump to margins in the long term, because I think autonomous platforms could have really attractive margin structures and recurring revenue associated with them. And then, the last thing I'll add is, like, the main story here is that EVs are growing, right? So EVs as a category grew 60% year over year, while gas-powered cars were down like 7%. So that's where Tesla is. I'd be worried about traditional autos, if anything.
Are you worried in any way about the impact of Elon Musk himself on demand for Teslas going forward? Is in any way that being shown up in the demand erosion?
Yeah, Elon Musk has always been a pretty controversial figure. I'd say at a minimum, what do we have to go by? It's really Tesla's results. Again, so Tesla alone in the fourth quarter, we know grew sales by 40% year over year, while in that same quarter, global auto sales were down roughly 8%. So that's what we have to go off of. He's a cult figure. I think he's really the person to drive the company towards reaching that full self-driving goal, where you can actually launch an autonomous ride-hail platform. So we're happy that he's committed to Tesla and sticking on for that.
Tash, I want to bring some more information, I suppose, to our audience about what you were talking about. In the shareholder deck, Tesla's talking about its next generation vehicle platform under development, additional details to be shared at the Investor Day, March the 1st, 2023. I think that's what you were saying about you suspect that is some form of fully autonomous vehicle for the future. I want to bring it back to the here and now again, because a lot of what Tesla hinted at was the problems of 2024 were largely China related. It basically talked about the production issues largely being centered on the Shanghai plant. You look at margins where they came in, you look around the narrative on ASPs, average selling price. We went to our audience, okay, and we said, did those price cuts in North America, Europe, China push you to consider buying a Tesla? These are the results, pretty clear, although I would point out they changed over the course of the day, with a good number of ballots cast, I suppose. Yes, Tesla's global price cuts have tempted at least our audience to buy. Affordability. Is Tesla too expensive right now for a consumer?
I think so. First of all, and I'm glad you showed that chart. One of the things that we learned is that since the price cuts, lead times have actually extended a bit. So we do know, we're already getting sort of initial indications of demand here. We also know that the price cuts made more vehicles eligible for tax credits. Of course, we don't actually model tax credits in our analysis. We think EVs are the solution longer term compared to gas-powered cars, regardless of regulation. I think really that's the picture here. That electric vehicles are taking share. Tesla's the market leader. They've just invested in additional capacity. They're at a single-digit low percentage points of total auto sales. So I think there's still, Tesla is, and EVs, again, still single-digit percentage of total auto sales as well. So I think, that there's room to grow in both of those.
We've got a lot of questions on Twitter for you from our audience as well. Most of them are related to Tesla's energy business. What did we learn about the energy business going forward? Will it be more of a star?
Yeah, so they did highlight the energy business recently, and again with that factory expansion, they talked how they've seen some good growth in that business. Overall, like our model is mostly focused on vehicles. We think that they should, while Tesla Energy does offer a really interesting proposition to consumers, and actually we've done some work to show that energy storage combined with Bitcoin mining can offer a great proposition to even make more use of renewable sources. But that aside, what should you focus on for Tesla? In our opinion, it's electric vehicles and autonomy. Those are the two main stories here that I'd watch over the next 5 years.
Yeah, Tash, really quickly, G. Munster of Loot points out that they guided to around 1.8 million vehicles for 23, which if you track a 50% compound annual growth rate doesn't make any sense based on last year's number. Do you see what I'm saying?
So last year, year over year, it does fall short of that 50%. But if you go back to 2020, you'd still be coming in over that few year period at with the 50% growth rate. So I think that's what they meant in their press release. Of course, I'm sure a lot of people will harp on that figure. But again, I think longer term, the story is electric vehicles are here to stay. And I'd be really worried if I was Ford or the other traditional auto manufacturers where the majority of their install base and the vehicles that they sell are gas-powered cars, which we see declining. That's not going away.
Right.
And by the way, they don't have a great autonomous solution either. They killed that project. So I think that's where the concern should be focused here on the traditional auto market.
Tasha, the other question from our audience for you is, what does Elon Musk have to say on March the 1st at the Investor Day?
Hey everybody, welcome back to the live stream. We're just going to touch base on some crazy price action that we're witnessing right now. Bitcoin is pumping right ahead of the Tesla earnings call. You can see that it had this big surge, but it is retraced back to this topping formation, so it's stuck under near-term resistance. But it has had an impressive move, and it has finished positive. It's up 3.5% so far. So Bitcoin is moving up. And what could that be signaling? It may be signaling potentially some bullish price action ahead of Tesla's earnings call. However, what we saw, and just before I keep going, we are experiencing a big snowstorm here where I'm located, and mixed with a thunderstorm, which is very peculiar, snow and thunder. So if we lose power, just fair warning, but hopefully we can remain. But what this price action could be saying, and we saw this price action actually occurring in Microsoft, where yesterday when we executed the Microsoft short, we basically saw Bitcoin selling off sharply. So perhaps is Bitcoin now leading Tesla's price and showing us bullish? I don't have the guts to hop on the long side of Tesla right now, considering it is 50% off the lows. We played that long trade and we're out right now. We're waiting for a directional move one way or another to get back in. But it's just interesting observation and correlation that Bitcoin could be leading Tesla to the upside, because Bitcoin was actually falling yesterday, and it was more or less, I believe it was this price action in here, where it was this little collapse here. Where am I? Let me just find out. It was this little collapse in here in Bitcoin that ended up leading Microsoft's price action, and Microsoft ended up popping but then reversing completely. So we're gonna continue to watch Bitcoin as things progress. I'm also going to start a daily wrap-up analysis in this video for my other members on my other channels. So we will be posting this analysis on our Trading Capital Inc. channel, which is strictly for our swing trading service, and where you can also find other information and educational videos that will help you learn how we swing trade, and hopefully you can learn from what we have been doing and eventually incorporate your own strategy, or better yet, learn our STACT, our stacked methodology. So starting off with the S&P 500 on the daily chart. Overall, nothing's really changed on the S&P, even though we had this massive bullish reversal. So this type of price action that we see when you gap down and reverse and pretty much negate that whole drop is, yes, it's bullish, but we have to be mindful that we're still stuck under major resistance. And this type of price action is notorious for luring a lot of people out of their shorts and a lot of people onto the long side. And I just frankly can't be buying on the long side when the major indices have had a substantial rally and they're off the lows and they're still fighting the major downtrend. And then when you factor in, so obviously if we look at the S&P, really we filled that technical gap from the gap down and we finished positive. And now you are closing above the 200-day, but you have not confirmed, and the markets love to suck new money in before potential turn. I'm still in the camp that we see a turn down in the market as we progress through earnings calls, but I could be wrong. But nevertheless, I will explain my thesis as to why I think we're going to see more downside. I will back it up with a couple of cross-sector analysis as to why I think we're going to see downside, especially with what has transpired today. Now, we still have Tesla's earning call, but overall the stock is really flat on the session. But IBM's down, ServiceNow's down, Lam Research down. And then you have likes of United Rentals up, Las Vegas Sands up. But some key important things that I will mention in this video that you should be aware of. But at resistance on the SPY, so accompanying the fact that the SPY is at resistance, and then when you also look at the longer term trend of the dollar, connecting these major pivots all the way from 2017 to here in 2020. Sorry, I'll just share my screen. So if you look at the dollar, we're trading all the way back to 2017 pivots, 2020, and then you have this little pivot action here. And then you're also falling into a downsloping wedge pattern, and those have a very, very likelihood, or they're more likely to breaking to the upside. So typically what happens in a wedge pattern is it'll hit the low end of the range near the apex, and then it will bounce up and out of that range. So if we get that type of bounce price action, which we are expecting, that's going to be negative for the equity markets, commodities in the near term. I'm not saying the dollar is not going to continue its descent lower, but I do think we're due for an oversold technical bounce. We've also analyzed the euro and the yen, which are pretty important key metrics for the overall market. Obviously, with the dollar trending lower, we can take a look at gold. Gold continues to be remaining on a massive surge. Gold is obviously looking to potentially go to this big trend line. You can see a major pivot low in COVID to your multi-bounce support zone over here before you had your epic war rally. And now you're actually rallying. And the interesting thing is you're coming into another technique where if you have to take the low of this rally to the high, you're coming into what looks to be almost a completely measured move, which is notorious for how stocks act on a technical basis. And I do think we're going to see a pullback in gold. Whether or not it's a big one, time will tell, but I do think we're going to get a pullback just because this is kind of a parabolic move on gold. And then you also look at this type of parabolic move. No one thought gold was going to come down, but the assets what goes straight up likely comes back down to retest support. So let's just be patient on gold. We're obviously on the short side now, accumulating a bit of a short. There is the potential that gold could have a blow off top in some sort of a fear-based event. What we saw in the news transpiring today was the fact that you had Biden speaking about more defense weapons and tanks and things that are in that nature being sent to Ukraine. So there's a lot of fear mongering and a lot of still negative press around Ukraine and Russia, which is obviously helping the precious metals trade in basically, I think, going and extending its gains a little bit farther than what most people have expected. But I do think we're very close to a pullback in gold. Nonetheless, if we take a look at another interesting earnings report that I think is a pretty strong indicator. Actually, we'll take a look at two of them. So the semiconductor plays. Semiconductors are a leading sector for the overall economy. If we take a look at the SMH, which you can see, let me just clear up some of these lines for ease of viewing. But if we look at the SMH, what most people are eyeing up and watching is this inverse head and shoulders, where you have this move here. I'll just draw it on the chart so we can see a clear picture. So you have this beautiful inverse head and shoulders pattern. You can see that beautiful pattern. So most people are watching that pattern, and it's a bullish reversal signal. Now, I'm in the camp that it's going to be a likely shakeout. I think this pattern is going to fail, and especially, and I've been on record saying that, just be careful about this potential bullish pattern that may be forming, because it might not actually technically break out, and we have not technically broken out of this pattern. And a lot of people like to front run these bullish patterns because it means they can squeeze an extra few percentage points. But if you get caught on the wrong side of a bullish pattern that fails, you could see a sharp move down very, very quickly. So why I'm concerned about the semis and what I'm going to bring to your attention, why I think the markets are likely going to see some continued sell side pressure, is the semiconductors. That's the main reason, along with the dollar and along with a couple other things. But the semis are a huge indicator. And when you factor in that Lam Research reported today, so let me just find them. Lam Research reported, and they're actually down about 3% in the after hours. So just over 3%. So you look at Lam Research, it has that same potential bullish pattern of a breakout that's occurring. And then when you flip to the after hours, boom, it's down in the after hours, potentially failing a breakout. And then you look at another semiconductor exposure, IBM. IBM's pattern is looking extremely bearish to me. You had your original bear flag break, boom. You never confirmed up until you closed this candle in 2.5 hours. You will confirm the break on the 4-hour chart. And then ultimately tomorrow will be the big day when the markets actually open. And do we confirm below this key trend? So again, there's signals in the market that we have to pay attention to. They're not guarantees, they're not a slam dunk, but it's certainly price action that we can actually analyze on a technical basis and eliminate the noise, eliminate the media, eliminate the fundamentals. There's been so many companies that have reported good earnings and they're down. And then there's companies that report bad earnings and they're up. So in this environment, fundamentals are very cloudy because no one knows the biggest fundamental of all, the macroeconomic global picture. No one knows. So if you don't know the main economic factor, the main global trend, is it a recession? Is it not a recession? Do we guide up? Do we guide down? Do we fire? You're seeing layoffs and firings picking up across all sectors, mainly the tech. Yes, there's still net positive in terms of where we hired people from 2020, but it all starts somewhere, and layoffs and firing is not a good signal for the economy, especially if they continue. Positive for price action of stocks, but that short-term positive for stocks when they lay off or fire people is eaten up very quickly and often reverses to the downside very quickly, especially if the economy falters. So again, the semis are showing us signals that we're paying attention to. Now we haven't confirmed the breakdown of the SMH, but let's just flip back to the SMH. So we haven't confirmed the technical breakdown, but certainly when you have weakness in leading semiconductors, that's where we want to pay attention. If this pattern fails, you likely probably come back to this low pivot here. Obviously there will be support before this whole move here. You won't fall straight away, but you likely come back to this 182 level, which will be a very, very big support level in the semis. So there's a lot of things that we got to keep an eye on, but overall, just be mindful that the major trend in the S&P is trading at resistance. If you look at the QQQ, which is the NASDAQ, look what's approaching, the 200 daily moving average. You can also draw a trend line, which you're arguably trying to break out of, but again, you haven't confirmed. So often the case when you are breaking out and it's going to be a confirmed solidified breakout, you often see the price action breakout convincingly. Right now, this price action breakout is not convincing. You've had a potential breakout, couldn't get above, so it's not convincing. So again, I'm just skeptical, but who knows? We'll just analyze things as they progress. So really that sums it up for the daily analysis video. We're going to continue to watch the Tesla chart. I'll flip back to that, but I am going to go silent on the mic for a few minutes. Tesla's earnings call is about in 6 minutes or so, so we'll see how things progress in that aspect, but I am going to go silent on the mic. So we have about 5 minutes and 40 seconds left until the earnings call. We will be streaming the earnings call, so we'll hear Elon speak. If you want to stay tuned on our channel, we will be showing the price action. We'll be listening in on thousands of traders and investors' opinions. We'll be listening live on the earnings call. So we'll be processing a lot of information and holding your hand through this potentially volatile price action movement. But let's stay tuned. We have about 5 minutes and we will stream the call live as well. So we have about a minute countdown to the Tesla earnings, a minute earnings call. And right now we're seeing Tesla catching a little bit of a bid. I'm going to share this tab. Let's take a look at Bitcoin as well. So Bitcoin's just remaining still at the retrace of this little topping formation neckline. Back to Tesla.
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2022 Q&A webcast. My name is Martin Viecha, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just going through a 22 recap. It was a fantastic year for Tesla. It was our best year ever on every level. The team did an amazing job. It's an honor, of course, to work with such an incredibly talented group of people. So in 2022, we delivered over 1.3 million cars and achieved a 17% operating margin, the highest among any volume car maker. I think maybe among any car maker. While doing so, we generated $12.5 billion in net income and $7.5 billion in free cash flow. Importantly, the Tesla team achieved these records despite the fact that 2022 was an incredibly challenging year due to forced shutdowns, very high interest rates, and many delivery challenges. So it's worth noting that all these records were in the face of massive difficulties. A credit to the team for achieving that. The most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So I mean that's hard to say whether that will continue at twice the rate of production, but the orders are high, and we've actually raised the Model Y price a little bit in response to that. So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so. So I think it's a good thing, all things considered. We're also making very good progress on cost control, and we're seeing the costs of production in Berlin and Austin drop commensurate with the growth in production, so as you'd expect. So, with respect to Autopilot, as of now, we deployed full self-driving beta for city streets to roughly 400,000 customers in North America. This is a huge milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. And we're currently at about 100 million miles of FSD outside of highways. And our published data shows that improvement in safety statistics is very clear. We would not have released the FSD beta if the safety statistics were not excellent. Regarding batteries, production rate of 4680 cells reached 1,000 cars a week at the end of last year. and we're increasing capacity for 4680 cells by another 100 gigawatt hours, as announced at Giga Nevada yesterday. Our long-term goal is to get to well in excess of 1,000 gigawatt hours of cells produced internally, and continue to use other cell providers. So to be clear, we will continue to use other cell providers, just that the demand for lithium-ion batteries is quasi-infinite and will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. And we've got an amazing plan for making the 4680 cell low cost and high energy density. So energy storage also saw record growth, and that is continuing to accelerate. It's always worth remembering that the three pillars of a sustainable energy future are obviously electric vehicles, solar and wind, and then the third key item is stationary storage to store the energy from solar and wind, because obviously the sun doesn't shine all the time and the wind doesn't blow all the time. So if you have those three things, you can convert all of Earth to a fully sustainable situation, many times over, actually. So I would like to just make it clear that there is a path to a fully sustainable future for humanity, and our goal at Tesla is to accelerate progress on that path as much as humanly possible. So so we're obviously ramping up megapack production, and we expect it to grow at a rate quite a bit faster than our vehicle output. So in conclusion, we're taking a view that we want to keep making and selling as many cars as we can. We believe we can keep pushing for strong volume growth while retaining the industry's best operating margins. As we mentioned many times before, we want to be the best manufacturer. But really, manufacturing technology will be our most important long-term strength. So, and we'll talk more about our upcoming plans at the March 1st Investor Day. And lastly, I want to once again thank all of our employees for delivering another record-breaking year. Congratulations, guys.
Thanks, Elon. And I think Zach has some opening remarks as well.
Yeah, thanks, Martin. So as Elon mentioned, 2022 was a terrific year for Tesla. I also want to congratulate the Tesla team and also say a thank you to our suppliers for your support during quite a volatile year. On a full year basis, revenue increased over 50%, operating income doubled, free cash flows increased over 50%, and our margins remained industry leading. Additionally, we continue to make progress on overhead efficiencies as non-GAAP OPEX as a percentage of revenue improved further. For Q4 specifically, sequential and annual margin was impacted by ASP reductions as we were managing through COVID impacts in China, uncertainty around the consumer tax credit in the US, and a rising interest rate environment. Note that in 2022, rising interest rates alone had effectively increased the price of our cars in the US by nearly 10%. Additionally, COGS per unit has increased on a year-over-year basis, driven primarily by three factors. First is raw materials and inflation led by lithium prices and discussed at length in previous calls. Second, we are working through the early ramp of inefficiencies of our Austin and Berlin and in-house cell production factories. Third, our vehicle mix over the last year has moved more heavily towards Model Y, which carries a slight cost premium to Model 3. Partially offsetting these impacts, we've continued to execute on Tesla controllable cost reductions in line with the progress we've made in prior years. These improvements include our continued work to gradually move towards a regionally balanced build of vehicles. The energy business had its strongest year yet across all metrics, led by steady improvement in both retail and commercial storage. While much work remains to grow this business and improve cost, we believe we are on a good trajectory. As we look towards 2023, we're moving forward aggressively, leveraging our strength and cost. There are three key points I wanted to make here. First, on demand, as Elon mentioned, customer interest in our products remains high. Second, on cost reduction, we're holding steady on our plans to rapidly increase volume while improving overhead efficiency, which is the most effective method to retain strength in our operating margins. In particular, we're accelerating improvements in our new factories in Austin, Berlin, and in-house cells, where inefficiencies are the highest. But we are attacking every other area of cost and unwinding cost increases created from multiple years of COVID-related instability. This includes logistics, expedites, accumulation of material buffers, part premiums, productivity, and overheads, as an example. As the world transitions from an inflationary to deflationary environment, we expect a strong partnership with our suppliers on this journey as well. In net, we've priced our products with a view towards a longer-term cost structure. Thus, there will be an impact on operating margin in the near term. However, we believe our margins will remain healthy and industry-leading over the course of the year. Third, we are continuing to ensure funding is prioritized for our long-term roadmap. This includes expanding in-house cell production, bringing Cybertruck to market, development of our next-generation vehicle platform, expansion of our manufacturing footprint, and growth of the energy business. We're looking forward to discussing these plans in more detail on our Investor Day in a month. Thank you.
Thank you very much, Zach. Let's now go to investor questions. The first question is, some analysts are claiming that Tesla orders net of cancellations came in at a rate less than half of production in the fourth quarter. This has raised demand concerns. Can you elaborate on order trends so far this year and how they compare to current production rates? I think
we've already answered that question.
Yes, exactly.
The demand far exceeds production. And we actually are making some small price increases as a result.
Thank you. The second question is in similar vein. What is the initial reaction been to global price reductions in early 1Q 2023, specifically in terms of order intake levels? We've answered that one as well.
Yeah.
So let's go to the next one. The next investor question is, will Tesla be able to take full advantage of advanced manufacturing production credits for battery cells packs? So $3,700 per long-range Model 3 and Model Y. It's $45 a kilowatt hour. For autos and energy products, and how much does Tesla expect to earn in the coming year from these credits?
I'll say a little bit about it, then I think Zach will add some. Long term, we expect these the value of these credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours a year of production, or even a few hundred gigawatt hours, it's very significant. So, but the credits do rely upon domestic manufacturing, and in the case of Panasonic with domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic in the future. We think it probably will be very significant in the future.
Yeah, just to add and put some boundaries on what we're expecting in terms of impact to Tesla for this year. So different products we think will get different amounts of credit. The regulations here are still in flux and there continues to be updates. So this is just our best understanding at the moment. But we think on the order of 150 million to 250 million per quarter this year, and growing over the course of the year as our volumes grow. And part of the work we're doing here, which is part of what this incentive package is trying to incentivize, is, as Elon mentioned, to move more manufacturing onshore in the United States, which is Tesla's plans anyways. And so I think we're pretty well positioned over the coming years to take advantage of this. But then also, part of what the goal of this incentive package is to improve adoption from our customers. And so we also want to use these incentives to improve affordability as we think about what the price points are on our products going forward. And so as we were thinking about our pricing changes in the US a couple of weeks ago that we announced, we were looking at what the credit benefit to Tesla would be to make sure that customers are able to to receive the benefit.
So we're seeing Bitcoin actually come in a little bit now. So could this potentially be a leading indicator for a Tesla stock collapse?